Right, hello to you all. Zaheer Anwari here on behalf of the Dynamic Trader. Can I get a quick screen check and mic check, please? Hi, Adinda. Okay, fantastic. Yeah, okay, fantastic. Hi, guys. Hope you're all well. I hope you all had a wonderful week so far. If you're watching this on replay as well, I hope you guys are all good as well. Okay. Um, excuse me. So just a brief background on myself. My name is Zaheer Anwari. Thanks, Jay. My name is Zaheer Anwari. I'm a trend trader. So these webinars are all very much from a long-term trend trading perspective, really trying to get the message across to all the private traders out there that there is a different approach and a better approach and a smarter approach to approaching the markets, rather than just being glued to your screen and day trading and scalping away. There is a smarter approach, and this is the message that I'm trying to get out to everyone through these webinars, through the platform that FX Street have given me, and slowly but surely we are succeeding, and the message is getting out there. Now, if you like what you see in the presentation today and you want to know more, then please contact me. And I've got this wonderful ebook that I'm sending out to people, which is called The Almost Complete Guide to Trading. It's written by Anne Chapman, and she's the amazing lady that taught me how to trade back in 2007 when I first started trading. So it's coming up to 10 years now that I've been involved in the markets. I went full time in 2011, and then 2012 I started mentoring. So it is a journey to get to achieving your goals, and the goals are very achievable. Don't feel that a full-time career in trading is not achievable. It is very much achievable, and as long as you have the right approach and the right mindset and the right attitude towards treating trading as a business and investing, you'll achieve your goals. You've got to get away from thinking that it's a get-rich-quick scheme and you can use free software and go to bounce from one free webinar to another and you're going to get the information that you need. It's not going to happen, guys. You need to start thinking long-term. You need to think of it as a business. So having said that, if you like what you see today, this ebook, I've been inundated with requests for this ebook, thanks to FX Street putting these webinars out on YouTube. I'm getting a ton of emails every single day asking for this ebook, and you can see why, because the internet is loaded with clutter. You go on the internet and you've got a lot of information, and I would say that most of it is inaccurate, most of it is misleading, particularly for private traders. And so this ebook will cut through the clutter and it will cover everything that you really need to know. So you can see from the trading bias, which is really important. Most people don't even have a trading bias. If you ask them to explain what is your bias, what is your edge, people can't break it down. And this is really important, guys, because an edge is where you find environments where you have more chance of making money than losing money. If you can't define your edge, you don't have one. And if you don't have an edge, you're getting eaten by someone who does, because there are prolific traders out there who have an edge. So you have to start thinking in terms of, what is my edge? Can I define it? If I can't define it, why not? Really, people really have to step back, because all too often people are too quick to open a broker account, download a bit of software and start executing trades. So we need to build that foundation so that you can build longevity on and consistency and growth. Okay, so you can see from the very first lesson, we have the trading bias, and it goes all the way through. You can see all the various points that are covered all the way through to a trading plan, which is essential. A trading plan is a contract between you, yourself, and the market, and you must have a trading plan. And this evolves with time and experience. This evolves. Just so that we quickly go down, you can see that it's very in-depth, charts, images, annotated diagrams. It's a very, very in-depth book. I believe there is a good 60 odd pages. Okay, so at the end of this webinar, guys, you can email me on zaheer@tdtpro.com, zaheer@tdtpro.com. I'll be writing that out later on, and I'll be sending this out to you guys. Okay, beyond that, if you then want to take the ebook to the next session, then to the next stage, then we do training courses. So please check out this website as well. Okay, training course starts at £99 for a month of training. £99 for a month of training, guys. If you can't invest that into yourself, then you have to question what it is you want from trading. So think along the lines of a business. Okay, right. Let's move on. Last week when I started doing the the screen share for my software, it cut out on me. So I'm just going to go to the chat box. Can I get a heads up that you can see my screen, my eSignal charting software? You can see the candlesticks, you can see the software that I'm using. So can I just get a quick yes? Administrator, anyone out there? Yes, okay, fantastic. So you can see my screen. Okay, so if it cuts off at any point, I'm sure I will be told. Okay, so what are we going to cover today? And in essence, what we need to do is go through a little bit of a journey from the very start to ultimately knowing where to enter the market. And this is what I'm going to take you through today: how to break down this screen that you can see in front of you, to understanding where and when I will be looking to enter into the market. Okay, so what are we going to cover today? We're going to cover time frames. We're going to uncover how to manage a watch list. We are going to cover market conditions. We are going to cover high probability environments. So how to understand whether you're in a high probability environment where you should be looking to take trades, or whether you're in an environment where you want to be standing aside and waiting for opportunities to arise. So we want to be covering high probability environments, knowing when to trade and when to stand aside. And finally, we'll be looking at breakouts and where I will be looking to enter certain trades. Okay, so let's focus on the first point. The first point is watch lists. Now, if you look on the left-hand side, so what you can see here is a 4-screen setup effectively. So you've got the watch list on the left-hand side, and it's an extensive watch list. Aussie dollar, US dollar at the top, to the South African rand, Japanese yen at the bottom. We've got the monthly chart in the top right, we've got the weekly chart in the bottom left, and we have the daily chart in the bottom right. Okay, we're going to come back to the time frames in a second, and we're going to focus on the watch list. Now, notice it's a big watch list, it's extensive. I don't just have one instrument like the euro dollar or gold, I have everything. So not only do I have currencies, I also trade stocks, and I also trade commodities. You want to keep an eye out on all the markets, because money moves from market to market. Regardless of what the news is telling you and all of that intraday volatility, what we're looking for is directional momentum. We're looking for movement either in a bullish market or a bearish market. And this is provided by the liquidity is provided by the big dogs, the institutions, the hedge funds. So we need to know where they are at any moment in time. They aren't always in foreign exchange, but foreign exchange is sold as the way to making quick money and quick riches. It's not. Foreign exchange is just one market. You want to learn to expand your portfolio to include stocks and commodities. Now, even if we focus on foreign exchange, we don't want to just focus on one instrument like the euro dollar. We don't want to focus on a single group like the majors. We want to be able to identify within foreign exchange where the money is. And it's actually a very simple process, because ultimately currencies move in groups. At the moment, I'm focusing on all the pound currencies. You guys should be very much aware of the fact that the pound is weakening. Not great for me as a resident of London, the UK, but as a trader and as a trend trader, the pound weakening is great, and I want it to continue weakening. Okay, so at the moment, I'm looking at all the pound currencies. How did I settle on the pound currencies? That's the question that needs to be answered. Okay, and it's a very simple process. So for now, we're going to go to the monthly time frame, and the first tool that I'm going to bring up is, just going to simplify this for now, are these pink lines. So you've got the PH and the PL. So if I just expand the chart, you can see you've got the PH here and you've got PL here. What does this represent? This represents the highest point and the lowest point of the previous calendar year. As we're in 2016, this is the high and this is the low of 2015. Okay, this is the calendar year, guys, January to December of last year. What we're looking at is current price action trading inside the range of last year. This is not what I'm looking for. This for me is what is known as a consolidating market. When current price action is trading inside the range of last year, this is where I stand aside. And it's very easy to then dismiss charts. So if we go through the Aussie dollar currencies, we can see the Aussie dollar, Canadian dollar has been trading inside the pink lines, but is now looking to push through. So maybe something to keep an eye out on. But you can see in recent times, it's been trading inside the pink lines. Aussie dollar, Swiss franc, very much inside the pink lines. Aussie dollar, New Zealand dollar, very much inside the pink lines. Now, if we look at the Aussie dollar, Japanese yen, the Aussie dollar, Japanese yen is actually trading below the pink lines. And that's because all the yen currencies are trading below the pink line. So here's the CAD Japanese yen. Here is the Swiss franc Japanese yen. So you can see all the yen currencies are trading below the pink lines. So what does that tell me? What that tells me is that the yen currencies have a bearish bias. Okay, if we go to all the pound currencies, so let's start with the pound US dollar. Pound US dollar, you can see is trading below the pink line, so it has a bearish bias. What that means is I'm looking for shorting opportunities. Pound Aussie dollar, below the pink lines, shorting opportunity. Pound Canadian dollar, below the pink lines, bearish. Pound Swiss franc, now this is one of those that is inside the pink line, so this is one that I can dismiss. Pound Japanese yen, bearish bias, very much below the pink lines. Pound New Zealand dollar, bearish bias. So you can see how quickly I can manage a portfolio that has 50 or 60 currencies, because anything that is trading inside the pink lines, I dismiss. So if you look at the New Zealand dollar, it's inside the pink lines. So all the Aussie currencies are inside the pink lines. I'm not interested. All the Kiwi currencies are inside the pink lines. I'm not interested. All the pound currencies are trading outside of the pink line. So I'm interested. I can then, by knowing which currencies are inside the pink lines and which ones are outside, I can then know what I want to be trading. Okay, the next point I want to bring up are the major levels of support and resistance that I look at. So you can see that my software automatically highlights major levels of resistance with red, major levels of support in green. The logic behind these, there's an algorithm which is explained in the ebook. So if you contact me afterwards with your email, I will then be within that ebook. There is an explanation of what make up major levels of support and resistance for me. Remember, in trading, guys, we want to remove the subjectivity. You don't want to draw a support or resistance because that's what looks like a support or resistance, or that's what you think is a support and resistance. You want to have a rule for everything that you do. And this is where trading is quite interesting, because unlike institutions that have rules and regulations to play by, as private traders, we don't. And because we don't have rules and regulations to play by, we are in an environment which is ultimately lawless. But that's where a lot of private traders fall short, because they don't know how to create their own rules. And if they do create their own rules, generally they're not the right rules. And secondly, most of the time, these rules are often broken in search of quick riches and money. Okay, and that is where good mentoring comes in. That is where good training comes in. Because when I started trading in 2007, I worked as a photographer. I was working full time, sometimes 15, 16 hours a day, sometimes 7 days a week. I didn't have the time or even the inclination to create my own rules. What I wanted was to understand how the markets work and to be given strategies and rules that work. And that's why I sought out a mentor. And that's why I am in the position that I am, because of the training and the approach that I had from the very beginning. Okay, so in the ebook, we will help you remove the subjectivity and the rules will be given to you. So you can then start applying this to your own trading. Okay. Right. Now let's move to the weekly and the daily time frame. So just to summarize, the monthly is where I look for support and resistance, and also where I start building a picture of the bias. I want a bullish bias or a bearish bias. If it's inside the pink lines, I stand aside. And also, one thing to note, guys, is that my software automatically updates all of these tools for me. So I'm not manually drawing these tools on. Okay, that's time consuming. It's a long process. My time is far more valuable. I've got good software that removes all of this manual labor for me. Can you imagine the amount of time people spend drawing support and resistance? I think some of you guys can relate to this. What takes hours will take me minutes because of the software that I have. And remember, guys, it's time that is more important than money. Money will come, but time is just ebbing away. Okay. So you want to focus on what is the easiest way for me to trade, the simplest way for me to trade, where I can adapt it around the lifestyle that I have, but still not compromise on profit. And that's where good software and that's where trading long-term trends come in. Right, now the weekly and the daily time frame. The weekly is big brother and the daily is little brother. So whatever weekly is suggesting, I want daily to be following. So if the weekly is bearish, I want the daily to be bearish. If weekly is bullish, I want the daily to be bullish. If the weekly is bullish and the daily is bearish, I look to stand aside because I don't have the setup that I'm looking for. So how do I know whether the weekly and the daily, or the weekly and the daily are bullish or bearish? And the answer is by using the 200 simple moving average, price source close, and the 50 simple moving average, price source close. That's on the weekly. And the same on the daily. I've got the 200 simple moving average, price source close, and 50 simple moving average, price source close. What I'm looking for is price to be trading above both moving averages in a bull market on the weekly and the daily, and below both moving averages in a bear market. If I have any other combination, I stand aside. So let's take the New Zealand dollar, US dollar. It's inside the pink lines. That reason alone, I don't want to trade it. If you look at the weekly, we're below the weekly 200, above the weekly 50, but we're above the daily 200, but below the weekly 50. There is no alignment in any of these timeframes, and for that reason, we want to be standing aside. Let's go to the euro dollar. There's been a lot of noise on the euro dollar in the last few days because of the weakness that's been happening. But if we look at the bigger picture, guys, the last time I traded the euro dollar was this trend here. So this is 1, 2, 3, 3,500 pips that price fell in that period. And if we look at what it's been doing since then, it's just in consolidation. This is that little bit of weakness that everyone's been getting excited about. But if you look at the bigger picture, it's in consolidation and we're inside the pink lines. If we look at the weekly, we're below the weekly 200, we're below the daily 200, we're below the weekly 50, we're below the daily 50. So we do have alignment, but let's look a little bit closer. Remember, moving averages are lagging indicators. That means whatever price is suggesting, the moving averages will follow based on price. So why are moving averages good? Moving averages are good because they confirm what price is telling us. Where a lot of people go wrong, and this is a very big mistake, is that people use moving averages as leading indicators. So for example, whenever moving averages cross over, they use that as a sign to get into a trade. What you want is for price to dictate when to get into a trade, and that moving averages are simply there to confirm what price is telling you. So let's have a look at the 50 moving average. It's flat. If we take it back to when price was in a trend, you can see it was heading down. If we look at what the 50 moving average is doing now, it's flat. And if you look at price, it's just consolidating. If you look at the daily chart, if I just compress it, look how flat the 200 moving average is, which is the black line. Look at the 50 moving average, it's just going sideways. If we go back to when we were in a trend, look at how it was acting as a level of resistance in a bear trend, and how the 50 moving average was heading down, how the 200 moving average was heading down. Now it's in consolidation, it's just flat. And so for that reason, you don't want to be trading the euro dollar. I know it's the most heavily traded currency and there's a lot of talk out there, but think about it. If most private traders lose money and most of them are trading the euro dollar, what does that tell you about trading the euro dollar all day, every day? It's not how it's done. You want to learn to manage a portfolio. So going back to what I was saying, the euro dollar is not interesting because it's inside the pink lines and the moving averages are flat. Now let's compare that to the euro pound. Euro pound, first of all, look at it in relation to the pink lines. We're above the pink line, so we have a bullish bias. Look at how it's reacting to this level of resistance. Price tried to push through and it's been pushed back down. We've got a level of resistance which is also at the round number 0.9. So round numbers are very important. If price starts to head up, then I would like to see price move to the next round number, which is the figure 1. Round numbers are very useful, guys. Why are round numbers useful? Because they're psychological levels that price likes to move towards. Think about it. If you're jogging, you're not going to stop at 11.2 kilometers. If you get past 11 kilometers, you're going to try and hit 12 kilometers. If you pass 12, you're going to try and hit 13 kilometers. You're really going to just stop at 11.2 kilometers. If you look at price itself, if you look at this support level, 0.7 round number. If you look at these two levels here, 0.8 round number. Okay, if you look at where price is struggling now, 0.9 round number. The trend is bullish. What we need to now wait for is price to suggest a trend continuation, and that is when we get a break and a close above these levels and price starts heading towards the figure 1. Until then, we want to be standing aside. If you look at the weekly, above the 200 and the 50 weekly, above the 250 daily. So we have alignment between the weekly and daily time frame. We are above the pink lines, but until it clears resistance, we want to be standing aside. So when is the earliest we want to be looking to trade this? And this goes back to now thinking in terms of high probability setups and thinking in terms of breakouts. A trend continuation at the earliest is when price breaks and closes above this level. When price breaks and closes above this level, this will then suggest a continuation of the trend. Until then, you want to be standing aside. And this is where patience comes in. Trading is an art which has its own set of skills that traders need to learn, to develop and nurture. Trading is not simply about opening a broker account, funding it with £50, using the software the broker is giving you, and thinking that you're going to make a lot of money from it. It doesn't work that way. Trading requires understanding. Trading has a certain set of skills. Once you understand these skills, you'll then be able to understand how to apply patience, which is one of the skills. Until price breaks and closes above this level, you want to be standing aside. And this is now pretty much a common feature across all pound currencies. So if we go to the pound dollar, you can see that the pound has been weakening since 1.7. We're now at 1.2 support. So price has weakened 5,000 pips since 2014. If you listen to the news would always tell you that the pound won't weaken any further. We had that when pound reached 1.5. We had the same when pound reached 1.4. We had the same when the pound reached 1.3. We're having the same now at 1.2, that the pound has reached the floor and we should see strength. Ultimately, guys, the market does what the market does. There is a low of 1985 at the figure 1. That's another move of around 2,000 pips that we could potentially see. So I would say ignore the news. I know a lot of people find this very difficult to understand, but it's a very simple thought process behind it. We are private traders. That means we are outside of the institutions. We're outside of the big dogs, the hedge funds, and they pay a lot of money to get news early. So by the time we hear the news, it's already been factored into the markets. The other thing to remember is that trading around news items, particularly major news items, brokers increase their spreads. You're going to be giving away a lot of money in spreads and in return having very little profit. It's all guesswork. It's all a gamble. What I would say is focus on the probabilities being in your favor, focus on understanding trends, and then trading. Just taking a few trades and allowing these positions to run for as long as possible. Less work, less stress, in fact, no stress, and large, consistent profits. So we're below the pink lines on the monthly time frame. If we look at the weekly, below the 200, below the 50, so we have a bearish bias. If we look at the daily, below the daily 200, below the 50, we have a bearish bias. Now, what am I waiting for? Very simple. If I get my support and resistance tool, I want to see price break and close below this support and 1.2. Yesterday is a perfect example of why you don't want to get caught up in intraday volatility. Price, there was some kind of news release. I'm not sure what it was. I think it's some kind of speech that someone was making. Price fell over 100 pips, reversed intraday. So you can imagine how many people lost money yesterday. And then we've seen strength to the upside. But if you look at the bigger picture, this is just in a bit of a mini consolidation. Why? Because we've had good weakness since the start of September. Now, certain things that people need to understand is that there is a rhythm to the markets. There are periods where the markets move and the periods when the markets don't move. Let's have a look at this recent trend. Look where it kicked in, September. And if you look prior to September, of course, we had Brexit, but if you look prior to September, it just went sideways. Why? Because these are the summer months. June, July, August is the summer months. Usually very, very little happens in summer because everyone's on holiday. As soon as the market makers come back, which is September, look at what's happened. There's your movement. Now, we can't expect price to just shoot in one direction. After every move, the market breathes, it consolidates. What we're now waiting for is the next round of trend and the next round of breakouts. And that will happen when we get a break in the close below this pivot support. If you're not already in this, then you want to be standing aside until we get the breakout. I have been short since 1.4. So I've got positions running since 1.4. These positions are now in excess of 2,000 pips in profit. My current positions, I've got 5 positions running in total, not on the pound dollar and the pound Aussie dollar. I've got 5 positions running, and I think one on the pound yen. I can't remember. I've got 5 positions running, and my current positions are over 5,000 pips in profit. And all I've done is get in at the right time, and I've held my positions, well-placed stop losses, and I've allowed these positions to run. Okay, so if you're not in this, a break and a close below this will give you an opportunity to enter. A break and a close below this pivot support. Until then, hold your horses, apply patience. Okay, pound Aussie dollar, another currency that's been doing quite well. Again, look at where it's weakened. 2.2, which is a previous support which turned to resistance in 2015, and we've had good weakness. This is now trading below 1.6 round number. So we want to see price move towards 1.5 and then 1.4. So we have a bearish bias below the weekly 200, below the 50, below the daily 200, below the 50. So everything is suggesting weakness. If we go to the daily time frame, again, look at the movement. Sideways over the summer months and weakness to the downside. I opened a position when price broke below 1.8. So I've got positions running since 1.8. We are now trading below 1.6. But look, after every move, there's your move to the downside. Price consolidates. What we're now waiting for is the next breakout. And the next breakout will be when price breaks and closes below this level. Now, I know what a lot of people are thinking, which is applying patience. I'm not making money. Yes, but money in trading is not made like a 9 to 5. Money in trading is made in periods. Know when to trade, know when not to trade. When one market is in consolidation, another market is in trend. That is why you want to keep an eye out on foreign exchange stocks and commodities, because when one market is in trend, another market is when one market is going sideways, another market is either bullish or bearish. So you want to start expanding. In addition, what a lot of people fail to realize is the power of compound growth. Most people have never and will never experience compound growth in their favor. Think of all the people out there who get in trouble when it comes to debt and credit cards. That is because the interest rate is growing at a phenomenal rate against them. When you get a credit card and you max out your credit card and all you can do is pay the minimum amount, that interest that the bank or the credit card provider is charging you is working against you, and you can never keep up with your payments. Now, imagine if you reverse that process and have compound growth working in your favor. This is what people like Warren Buffett, he's a master at it. George Soros, the turtle traders, they all understood the power of compounding. Jesse Livermore. And this is why this style of trading is so powerful, because it takes a few minutes a day. It can be adapted around any lifestyle, because we're looking at the monthly, weekly, daily time frame. It takes no more than 10 to 20 minutes a day, but you're not compromising on profit. Day trading, it's where you sit in front of your computer and you're in and out of positions every day chasing money. You have winners, you have losers, winners, losers. You don't really get anywhere. Most people over risk, and that's where they blow their accounts. My losses are always capped. I have very, very small losses, 1 or 2%. But my returns are far bigger because I hold and I compound. And this is all happening in the background while I get on with my day-to-day. And this fits perfectly around when I was a photographer, because I didn't have the time to be sitting in front of a computer. And secondly, guys, do you really want to be doing that? I don't understand why people have the fascination of being glued to the computer, watching candlesticks. I really don't understand that. In the early days when you're learning, I understand that and I get it, and you must do that. But 1, 2, 3 years down the line, when you're still not having the results that you want and you're still glued to the screen, there surely must be a thought process that goes to your head that goes, I'm tired of this and there must be a better way. But people don't want to let go of that fact, because this is where the ego comes in. And the ego is, oh, I've had winning trades before, I must be doing something right. But when the losing trades blow an account, that seems to be forgotten. Okay, so guys, This is the way forward as private traders. This is the most beneficial and the most powerful way. If you're not in this, which is the pound Aussie dollar, if you're not in this, a break and a close below this pivot support will offer you an opportunity to get in. Okay, let's have a quick look at the pound Canadian dollar. Now, we've looked at all the pound currencies. Doesn't mean that you need to be trading all the pound currencies. I'm not in the euro pound. Why? Too much resistance ahead. I'm not in the pound Canadian dollar. Why? Too many support levels ahead. What I'm looking for is the path of least resistance. The pound US dollar, the pound Aussie dollar, far better looking setups than the pound Canadian dollar. So even though we have the goods, even though the weekly and the daily are telling us that we have alignment, the monthly doesn't look as attractive as the pound dollar. If we go back to the pound dollar, if I compress the chart, you can see that there aren't any support levels ahead, apart from the round numbers. Whereas if we go back to the pound Canadian dollar, we've got a lot of support ahead. We've got this level, 1.6, 1, 2, 3 support levels here at 1.5. Not a very good looking chart. And you don't need to trade everything. All you need are 2 or 3 good trends and then repeatedly compound onto the same trend. Warren Buffett, he says amateurs massively diversify their portfolio. Warren Buffett only requires 2 or 3 stocks a year and repeatedly compounds. You want to do what he does. You don't want to be doing what you're told to be doing, which only feeds brokers, which is day trading. It doesn't work. Okay, pound Japanese yen. Again, good weakness to the downside. I was short on this for several months and then closed my position just before Brexit. So from when price broke below the pink lines to 150. So that was a move of over 2,500 pips. Very good profit. Closed my position. I then opened up one position on the release of Brexit, and this position is in good profit. You can see now that we have support levels ahead. Below the daily, below the weekly 200 and the weekly 50, below the daily 200 and the daily 50. Again, if we look at the monthly time, at the daily time frame, sideways trend, and now a little bit of a consolidation. If I get my support and resistance tool, just highlight that low. A break and a close below here will suggest a trend continuation. But if you look at the monthly chart, that 120 level is very close to support. So you want to wait until this whole support zone is cleared and then look for shorting opportunities. Okay, final currency we'll look at is the pound New Zealand dollar. Notice, guys, I've focused very heavily on the pound currencies because the pound currencies are the ones worth trading. Weakness to the downside. If you guys aren't aware of what a trend is, or if you believe that trend trading doesn't work, well, there's a trend right in front of you. I hear a lot of the times where trend trading used to work, 30 years ago. It's not a trend trading market anymore. It's nonsense. The reason why people say that is because they don't know how to identify trends until it's too late. And once they are in a trend, they don't know how to hold and stay in a trend because of fear of losing profit, stop losses are too tight, etc., etc. We look at the pound New Zealand dollar. This is now creating all-time lows. If this continues to the downside, then this will offer shorting opportunities. Below the moving averages on the weekly, below the moving averages on the daily. So we do have alignment. However, when are we looking to enter? We want to enter when price breaks and closes below this support level. Excuse me, not very well drawn. There you go. A break and a close below this support level will offer an entry. Remember, we've got 1.6 as well. So if you want to be a little bit more patient, wait for the 1.6 level to clear as well. Okay, let me go to the chat box and see if I have missed any questions. Louisa, okay, great. Hi, Louisa. Why is last year's price range so important? Last year's price range is important because it helps me to identify a bias. Trading is all about having a bias, having an edge. What is an edge? An edge is where you have an edge is an environment where you have more chance of making money than losing money. So you want to have parameters that define your edge. When price is inside these pink lines, or when price is trading inside these annual levels, so the euro dollar, for example, there is no bias. Yeah, I can see price weakening, but this is all in hindsight. I really want the weight of the market in my favor. I don't want to be swimming against the tide. I want to be swimming with the tide. While price is inside these pink lines, it's going to ebb and flow. Think of it. Look, there's the tide going out, coming in, going out, coming in. Yeah, it's weakening at the moment, but we saw that weaken back here as well. Price was weakening here for 2 months, and then we had a bounce back up again. Then it came to resistance and it's weakening again. I don't want to be caught up in this kind of environment. I want to be trading an environment like this, where it's just continuous weakness. Okay, and that's why the annual levels of last year are very significant, because they allow me to develop an edge. And one of my rules is I want to see price trading outside of these annual levels. Now, if you guys only focus on one instrument like the euro dollar, then you're going to be waiting a long time. But you've already seen that by having a big portfolio, while one currency is setting up, another one is already set up. And I've repeatedly mentioned the importance of stocks. Guys, here is a stock. I have been in Nvidia since $40. So that means I've been long on this stock for 1, 2, 3, 4, 5, 6 months now. So while people are getting caught up in the small moves of the euro dollar, this is Nvidia. And I don't generally talk about percentage returns because people don't appreciate compounding. But if I was to tell you how much profit this has returned me, most people wouldn't believe it. And those who do would really want to be able to understand how to trade trends. Because I've got a few trades, compound trades running on here, and the growth is significant. Okay, and if you look at the logic behind it, it's trading outside of the pink line. So we have a bullish bias. If we go to the weekly, above the weekly 200, above the weekly 50, above the daily 200, above the daily 50, look at how price is moving on the daily chart. Look at how it's using the 50 as a level of support. Nice, clean looking trend. And it's these periods here where a lot of traders panic because the market's going against them. But this is where you have to have faith in your system and your understanding. And this is where you have to understand some of the natural features to price. And that is the 50 moving average acts as a level of support. It was from this gap up here that we started looking for long opportunities. And you can see now that it's trading above $70. What do I expect to happen? Well, if I draw this line here, what I expect to see happen is a price to come back, retest the $70 mark, and then bounce and move towards $80. I want to see this stock move all the way through to $100. And this is very possible. Okay, so you want to start expanding your portfolio, guys. Think about it. What is it you want to achieve? I know what I wanted to achieve, but what is it that you want to achieve from trading? When you speak to a lot of people, they have their priorities wrong. What most people want to achieve is to be right. That's why whenever they have a winning trade, they get excited and they put screenshots all over social media and they want to shout to the top of the world, hey, look, I got it right. Look how much money I made. But I can guarantee you one thing. Those people who are quick to show their winning trades are also quick to hide blown accounts and losing trades. And their blown account and their losing trades are far more significant than their winning trades. So for me, it's not about being right. It's about making money and making consistent profit and consistent growth. Okay, so understand what your priorities are. Know what your why is. I had during my time as in employment, I had 2 bosses back to back that were the kind of bosses that you do not want to ever come across in your lifetime. They're the kind of bosses that I do not particularly understand how people stay in a career when they have a boss that has very little respect for them. So my reason for trading was to get out of that, to not have a boss. And for me to get out of that system, I didn't want to be right. I wanted to make money. And I knew it wasn't a quick fix, which is why I worked all the hours that I could to make as much money as I could, to feed my broker account as much as I could, to then be able to walk away from the system when I was able to fund a lifestyle. When I started trading, I only had 1 trading account. I now have multiple trading accounts. Some allocated to stocks, some allocated to foreign exchange, some allocated to commodities. So you can see how over the last 10 years, I've grown an initial pot of money into significant amounts that I can spread it across multiple accounts and multiple brokers. Okay, and this is the vision that you want to have. Get away from day trading, get away of thinking that you aren't good enough to achieve this and that you require quick riches to make a success. You don't. You guys are very capable of doing this. You just got to approach it the right way. Okay, I think that's everything. Do you retest support and resistance before entering? Sometimes. You said before that no more than 5 compounds to trade. Why this figure? Just for money management purposes, just for rules. Jay, you can have as many compounds as you want. I tend to have 5 compounds running per trend. So imagine 5 on the pound dollar, 5 on the pound Aussie dollar, 5 on the pound yen. I like to be quite aggressive with my compounding and let them run. So rather than be slow with my compounding or compounding all the way through the trend, I like to be quite aggressive with my compounding early on and then let those positions run for as long as possible. With that understanding and with the experience, you will understand that's far better to growing an account than repeatedly compounding all the way through. I hope that answers your question. Do you retest support and resistance before enter? Sometimes. B, it depends on market structure. So if the market has been consolidating for a long period of time, then I would wait for a retest. If it's just an initial breakout, then I don't wait for a retest. Okay, so it really depends. Again, that's mentioned in the ebook about entering on breakouts. It's mentioned in the ebook, I believe. So that will be explained there. Okay, guys, I'm just going to put my I've just put my email in the chat box, zaheer@tdtpro.com. If you have any questions, if you want to know more, if you want the ebook, is it better to enter on a pullback or on a breakout? Louisa, focus on breakouts. Pullbacks, understand. It's a really good question, Louisa. Thank you. Pullbacks require more knowledge and more experience. Breakouts are very easy to identify. Focus on breakouts and then add pullbacks to the way you trade. Okay, keep it simple. Hi, Eleanor. Okay, it's now 4:45, guys. Where can we get the ebook? Yep, as already mentioned, please email me. I've just put the email here, zaheer@tdtpro.com. Please email me and I will email you back with the ebook. Okay. All right, all have a wonderful end to the week. Have a wonderful day. Happy trading. Be smart. Nothing really going on at the moment, so be patient. Allow the setups to come to you. Any questions in the meantime, please get in touch. Thank you, administrator, and have a wonderful day. Thank you. Bye-bye.